gold has gone up 72% from bottom to high over 2 years. And in that context, a pullback from the high, which was before Trump was elected, from the high to below was only 8%. And it only took us back 5 weeks. That's not much of a correction. I was certainly thinking that we would have a bigger correction. I said last week, not that I would be happy with a bigger correction, but I would be a lot more comfortable with a deeper and longer correction. And I'm not talking about, 1,806 months. If we get to 2,500 and stay there for a few weeks.
According to veteran fund manager AdrianDay, who specializes in global markets and resource stocks, the recent movements in the gold market bear striking similarities to patterns observed in previous cycles. The precious metals trajectory has drawn particular attention as it navigates through a period of consolidation after reaching historic highs. In a notable parallel to past market behavior, Day's analysis of gold's post-election decline during the Trump era offers valuable context for current market conditions. He then emphasized how gold's impressive 72% rise over 2 years made an 8% pullback appear relatively insignificant. This perspective is particularly relevant today, as gold has surged nearly 70% from its September 2022 low to a record $2,790. The current market scenario presents similar characteristics, with recent pullbacks being viewed as potential buying opportunities within a broader uptrend. Market technicals suggest that as long as the 2024 uptrend line holds at $2,550, the current retracement remains constructive, though caution is warranted if prices breach the $2,278 level. Day prefers a more substantial correction, suggesting that consolidating around $2,500 for several weeks would create a more substantial base for future gains. He believes recent price movements don't yet qualify as a significant correction. Current market data supports this analysis, with gold trading at around $2,645 during early Asian trading sessions. A strengthening U.S. dollar has impacted the metal's performance, though geopolitical tensions continue to provide underlying support. November saw gold decline by 3%, marking its most significant monthly loss since September 2023. Day highlights the market's resilience, noting strong buying interest during recent dips. After pulling back from the $2,790 resistance level, gold found support near $2,540, though upward momentum remains somewhat limited. Similarly, silver is consolidating near critical levels, facing resistance due to economic uncertainty and demand fluctuations. However, gold and silver remain attractive safe haven assets amid ongoing geopolitical risks, reinforcing Day's view that while a deep correction in gold is unlikely, there may still be room for a mild pullback. Before diving deep into this video, subscribe to our channel, hit the bell icon, and share.
I think we know the reasons. We can talk about them if you want, but we know the reasons why gold went down after the election. But look, the truth is, if you look at, if you think that we've had since the bottom, gold has gone up 72% from bottom to high over 2 years. And in that context, a pullback from the high, which was before Trump was elected, from the high to below was only 8%.
Yeah.
And it only took us back 5 weeks. That's not much of a correction. And so I was certainly thinking that we would have a bigger correction. I said last week, not that I would be happy with a bigger correction, but I would be a lot more comfortable with a deeper and longer correction. And I'm not talking about, 1,806 months. If we get to 2,500 and stay there for a few weeks, that would just make me a little more comfortable. What we've seen so far is really not much of a correction.
No.
Now, the fact that gold bounced back until today, of course, but the fact that it bounced back really so dramatically from that just tells me that there's a lot of buying on the sidelines. And so I don't think we're going to have a deep correction at all. But I do think there's a little more to go. I would feel a lot more comfortable. I didn't necessarily make a prediction on where it would go. I would just feel a lot more comfortable after a 72% move. With hardly a correction or pullback in 2 years, I would just feel a little more comfortable if we'd have had a deeper, longer correction. But, the market will do what it's going to do. And so our job is just to try to look at the risk for reward and For people that are fully invested, I don't think they need to mortgage their homes to jump in.
No.
For people who are new to the space, I think you take advantage of what we have without necessarily going all in. I mean, there's a lot of things that have happened to cause gold to pull back today. There's the nomination of Steve Bessent as the Treasury Secretary, and he's regarded quite widely as someone who will, push through the tax cuts. He's in support of the Doge program of Elon Musk and the Dick Swami. And so these are things that are negative for gold.
Right.
And he's considered to be competent. So that's negative for gold. Obviously, the news that Israel may be moving towards a ceasefire, that's negative for gold. I'm not sure how much of that is in the price.
Right.
But certainly war in the Middle East is, shall we say, a positive for gold. I don't think it's by any means the main driver, but it's, if you like, a positive. So a ceasefire would be a negative.
Mm-hmm.
And so these two things coming at the same time, particularly after you've had such a strong pullback, such a strong recovery, leads the gold price to come down. But the gold stocks are still remarkably cheap. That's something that we continue to focus on. And especially if you get to the end of the year, you've got some tax loss selling in some of the stocks. I mean, pretty much this year, junior gold stocks are about the only thing people have tax losses in. We don't even have tax losses in Bitcoin this year.
AdrianDay emphasizes that the cost of living has surged by 22% over the past 4 years, according to government figures, suggesting that wages have failed to keep pace with this increase. His perspective reflects growing public skepticism about claims of economic strength. However, official data paints a different picture, particularly when examining the period since the pandemic's onset. Analysis shows that wage growth has outpaced inflation for typical workers, with wages rising 23% compared to a 20% price increase since the fourth quarter of 2019. The current trajectory of real wages appears to align with pre-pandemic projections, suggesting that worker compensation has returned to levels that would have been expected had the 2020 pandemic and recession never occurred. Day also notes the public's growing awareness of political and economic manipulation, stating, "The public recognizes that the emperor has no clothes." He links this shift to inflation, emphasizing that the CPY's 2.7% figure excludes food and energy, failing to reflect the actual cost of living. Let's get back to the interview.
Absolutely. But, without getting too political, there were several lessons from Trump's election victory. But I think one big lesson is that the public recognizes that the emperor has no clothes. I think the public finally is seeing through all this stuff. And they're seeing through it because it was hammered down their throats, to such an extreme degree. And I don't think they accept it anymore. That's true of the inflation. And even Jerome Powell admits, but you and I both know that the CPI, the cost of living numbers may have come down. Let's just go along with the government numbers, which of course aren't realistic.
Right.
Let's just go along. We're now at 2.7, 2.8%. That's for people who don't eat, by the way, and don't use any energy. That's the CPI ex food and energy. But that 2.7% is added on to the 4% last year and the 8% the year before. And so even by the government's own numbers, the cost of living is up 22% in the last 4 years.
And your dollars are being devalued and depreciated.
Yeah. And most people's wages have not gone up by the same amount.
No.
And so when the government says, inflation's under control and the economy is really strong, people are saying that's not true. People talk about the Ukraine war and the Russian sanctions and the supply chain issues after COVID and so on. These things do not cause the aggregate cost of living to go up.
Right.
They can distort prices of one thing over another. But the only thing that makes the aggregate prices go up is if you print more money.
Right.
So if you print more money, then that money goes into the prices of goods and services, which rise. But if you don't print any more money and you have, sanctions on Russian oil, then of course that oil, oil's fungible. So that's not a good example because that gets into the world market anyway. If you have supply chain issues, with, let's say, widgets, and the price of widgets shoots up, if you haven't increased the money supply, then the price of something else has to go down to offset it. So apples might go up, but eggs go down, or eggs go up, but apples go down.
Right.
You only get the aggregate increase if you increase the supply of money.
Gold and silver remain resilient despite challenges. Gold shows strong growth and minor pullbacks within a broader uptrend. Silver, similarly influenced by economic factors, continues to be a safe haven asset amid uncertainty. Any short-term corrections will likely offer buying opportunities, with both metals maintaining upward momentum in uncertain economic conditions. What are your thoughts on the current gold and silver trends? Share your thoughts in the comments below. If you found this video helpful, please like, subscribe, and hit the bell icon for more updates. Thanks for watching and stay tuned for more content.